Welcome back to Investing Talk Podcast.
Today we're looking at NuScale Power.
As usual, before we start, subscribe, like, and comment to this video to support the show.
Yeah.
And if there's a specific company you want us to look into, leave it in the comments below.
So let's get into the analysis. What we're looking at here is a company that is, well, it's fundamentally defined by its first mover status in small modular reactor, SMR technology.
Right.
This isn't just about, making small nuclear reactors. It's really about being the first one past the finish line in what's become a global race for clean, scalable power.
And when you say a race, being first means you've already cleared the biggest hurdle. And we're not just talking about patents here. This is about regulatory approval, which, in the nuclear sector is just notoriously complex.
Absolutely. When you look at the whole industry landscape, the scale has, they have a significant regulatory moat that competitors, frankly, just haven't breached yet. It is the only SMR provider with U.S. Nuclear Regulatory Commission design certification, the NRC.
Okay, I think we need to pause right there for a minute. Because NRC certification, that just feels like the ultimate game changer. For listeners who maybe aren't steeped in the nuclear industry, can you explain just how massive that is?
Think of it like a new drug getting FDA approval. It's not just a sign-off. It's years, literally years, of intense technical scrutiny, design validation, safety testing, all to prove the reactor design is safe and reliable enough for someone to actually build it commercially. The cost, the timeline to achieve that, it's a huge barrier for anyone else trying to get in.
So it basically validates their whole model.
It validates their specific 77-megawatt design and gives them this unparalleled advantage, not just for building in the U.S., but for partnering with other countries looking for proven American tech. It essentially stamps their design as the global standard for safety right now.
Okay, so they have the golden ticket.
Yeah.
How are they actually using that advantage in the marketplace? Because a regulatory moat doesn't mean much without commercial traction.
And that's where the deals start getting huge. The big one, the headline story, is the landmark partnership they have with the Tennessee Valley Authority, the TVA, that's under the Entrée 1 agreement.
Right.
They're planning to deploy up to 6 gigawatts of NuScale SMR capacity.
6 gigawatts. That's a significant number. To put that in perspective, how big of a deployment is that, historically speaking?
It's the largest planned SMR deployment in U.S. history, full stop. This immediately moves NuScale from being a research company to, potentially, a major infrastructure powerhouse. It sets a precedent for how other utilities might integrate SMRs to get to carbon-free baseload power.
So replacing old coal plants, that kind of thing?
Exactly, replacing those with something flexible and clean.
That sounds incredible for grid power, but
Nah.
one of the big selling points of SMRs is supposed to be their flexibility. What about uses outside of the traditional power grid?
And that's where the scalability factor comes in. And this is where it gets really interesting for their future revenue streams. Their power module technology, it's scalable. So a utility can just add modules as they need them.
Oh, okay.
Each module gives you 77 megawatts of electrical output, and you can have up to, I think, 12 modules at a single site.
So you're not building one of these massive, decades-long projects. You're just dropping in certified, scalable components based on what the demand is.
Precisely. And the applications go way beyond just powering homes. Because SMRs can provide this super reliable, clean baseload power, they are, frankly, perfect for these high-demand 2,147 operations.
Like data centers.
Huge energy-hungry data centers, that's a massive growth area. They can also support large-scale hydrogen production, which needs immense amounts of clean energy, or desalination plants in water-stressed regions, even providing high-temperature industrial heat for manufacturing. It's a multi-sector solution.
And this isn't just a theory for the U.S. market. They're actually executing on this globally right now.
They are. You just have to look at the RoPower Doi project in Romania. That project is underway. It's slated for 6 modules, and that demonstrates they can navigate these complex international regulations and actually execute. It's a crucial proof of concept for other international customers.
Okay, so the tech, the regulatory approval, the market position, it all looks phenomenal. But these hyper-growth infrastructure companies, they always have really complex financials. Let's pivot to the balance sheet. What's the revenue trajectory telling us?
Well, financial trajectory is showing those first signs of real growth tied directly to their projects. We saw a nice acceleration in Q3 2025 revenue, And that was driven up primarily by engineering services for that Romania project.
So international demand is already showing up on the top line.
It's translating into measurable growth, yes.
And the company itself is putting out some extremely bullish forecasts. I mean, these are blockbuster projections. They're estimating over $400 million in revenue and, $42 million in earnings by 2028.
That projection is the absolute pinnacle of the bull case, and you have to look at it with a bit of skepticism. To get there, they need to execute an outsized, really accelerated ramp-up in project wins and deployment globally over just the next 3 years.
A tall order.
It signals the potential, yes, but it's so heavily contingent on rapid adoption. That's why analyst forecasts have such a huge range. The average is still high, though nearly 23% average annual growth through 2027, with some upside scenarios pushing 50%. But they have to hit every single milestone perfectly.
That's the potential future.
Yeah.
Let's talk about the near-term reality, which it involves some persistent net losses. Q3 2025 showed a staggering net loss of over $500 million, $532 million. That is a massive capital burn.
It is a massive number, and this is where context is absolutely critical. Yes, early-stage disruptive infrastructure companies are capital vacuums, but we have to isolate the reason for that specific loss. Nearly all of it, $495 million, was a very specific one-time expense tied directly to securing that huge Entra One agreement with TVA.
So that $500 million hit wasn't just cash being burned on, day-to-day operations?
No. That cost was likely a large milestone payment or some kind of financial obligation related to securing the rights and committing resources to that contract. You're basically paying a huge premium to lock in a massive pipeline of future revenue. It's a huge loss on paper, but it confirms they landed the biggest deal in the industry. It's an investment.
That context is vital. But it still highlights how capital-intensive this whole business is. To get multi-billion-dollar deals, you need hundreds of millions in the bank. So how are they managing their immediate liquidity?
They've been very proactive. Aggressive, even. In 2025, they successfully raised $750 million through an at-the-market equity offering.
Right.
And that cash infusion was crucial. It bolstered the balance sheet, it maintains their liquidity, and it funds these huge ongoing operations like the CapEx needed to get projects like RoPower started.
Yeah.
They're funding growth with equity, which is common but challenging.
And that reliance on equity raising brings us to what feels like the most critical near-term event. A corporate governance hurdle that could make or break their funding flexibility.
Exactly. This is the one date everyone watching the stock has circled on their calendar. The shareholder vote on authorized share increase. It's scheduled for December 16th, 2025. This vote isn't just procedural. It's almost existential for them in the short term.
Why is this vote so important? What happens if it fails?
A yes on this vote is absolutely essential. If they don't have enough authorized shares, they can't effectively raise the capital they need to fund the very projects they're winning. So a failure here could severely restrict their funding flexibility, making it extremely difficult to fund future operations. It basically hampers their ability to grow, and it brings up what are called going concern risks, the risk they might not be able to operate a year or two from now. It's a make-or-break vote for their runway.
And speaking of shares and capital, we should probably mention the potential for dilution coming from existing major investors. That has to add some complexity for institutional funds looking to get in.
It does. We saw the conversion of Class B units to Class A common stock, which helps simplify things. But critically, we also know that their major shareholder, Fluor, plans to sell a very large block of shares, 71 million Class A shares, with the window for that ending in Q1 2026.
So there's a potential overhang on the stock.
It implies potential near-term selling pressure and dilution, yeah.
Yeah.
And that complexity is why you see institutional flows are kind of mixed right now. The big funds are likely waiting for proof of execution on these projects and a successful outcome of that December vote before they really pile in.
So to summarize the risk, they have the moat, they have the upside. But the primary risk is flawless execution, cost management, and, most pressingly, getting that shareholder vote to go their way.
That's the risk profile in a nutshell. Their business is so dependent on these milestone-based contracts, and SMR deployment is new infrastructure. If there are delays, if there are cost overruns, which, history tells us is common in big cutting-edge projects, it could strain their liquidity very quickly, even with that big capital raise. They have to execute on time and on budget.
Okay, let's turn to the immediate future then. If I'm a high-risk investor watching this space, What are the critical dates I need on my calendar over the next, say, 3 months?
There are three major high-impact events coming up. First, and most critically, December 16th, 2025, is that shareholder vote.
Mhm.
The market will react very strongly to that outcome one way or the other.
Right.
Second, January 15th, 2026, that's when the window ends for the floor equity sale program.
Yes.
That's going to provide some much-needed clarity on the supply side and relieve some of that dilution pressure.
And the third.
Third is January 29th, 2026. That's the anticipated Q4 2025 earnings release. That will give us a fresh look at contract wins, the true cost of the revenue ramp, and importantly, updated guidance.
And beyond those hard dates, what kind of news should we be looking for? Any potential partnership announcements in the pipeline?
I think we're looking for them to immediately leverage that framework established by the TVA agreement. The anticipation is high for new U.S. utility partnership announcements, maybe in the first half of 2026. If they can replicate that TVA success, that would be a huge catalyst.
You confirm market acceptance.
Exactly. And we're also just expecting continued milestones for the RoPower project in Romania, signaling they're hitting their targets.
From a technical perspective, how is the stock trading right now? Does the chart reflect all this risk and potential reward?
Despite the volatility from the financing events, the technical structure is actually surprisingly constructive longer term. The stock is trading above its 200-day exponential moving average, the EMA, which is around 1743.
And holding above that is a good sign.
It indicates that a longer-term uptrend is intact, that institutions are still willing to hold through the noise. Analysts are anticipating a trading range probably between $16.50 and $20 until we get clarity from that shareholder vote.
That sounds like consolidation. But when you look at what analysts think this stock could do if they execute, I mean, the numbers are enormous. It just reflects the binary nature of this investment.
The potential is definitely baked into those price targets. The average 12-month target from analysts is $41.07. That suggests, huge upside, well over 100%, if they can execute.
But there's a big if there.
A huge if, and you see it in the range of those targets, which span from like $24 all the way up to $60. That massive gap tells you just how high the uncertainty and execution risks still are. It's a conviction stock.
And finally, because this is such a fascinating high-tech sector built on this unique foundation, there's always some speculative buzz out there. What's the word on the street, even if it's unconfirmed?
Well, the unconfirmed chatter, maybe unsurprisingly, it all focuses on that unique regulatory position being the only certified game in town. There are rumors circulating about potential new rounds of Department of Energy funding grants, maybe in the first half of 2026. And given their first mover advantage, you hear speculation about potential M&A interest from major industrial conglomerates or energy supermajors. That moat makes them a very attractive, though very expensive target for anyone looking to instantly buy market leadership in SMR.
So what does this all mean for the person at home trying to process all this risk and all this potential?
I think the concluding thought has to be clear. NuScale Power offers this unparalleled exposure to multi-year structural growth in decarbonized power. It's driven by that regulatory moat and these landmark contracts.
Yeah.
However, the investment remains very high risk, high reward. It hinges entirely on successful operational execution and, most critically, on the outcome of that December shareholder vote. If they clear that hurdle, the path is wide open. But until then, it remains speculative growth.
That is a fascinating look into a company that really could define the next generation of energy. Make sure you hit that subscribe button to catch our next look at the stocks driving the future.